Good afternoon, welcome to Markets Today, the afternoon version. My name is George Bodi, co-hosting with Bide Mwema. We have a lot lined up. We are tracking the derivatives market, which was officially launched yesterday. We'll also be updating on the stock market, the spot trades. We're going to be calling them spot trades update. Just about 30 minutes to market close. We're also having a discussion around an investment, a perfect investment, or not a perfect, an ideal investment strategy for the second half of the year for sub-Saharan Africa markets. We'll be having with that a sub-Saharan analyst who's been looking at the sub-Saharan assets, and we're looking at markets like Nigeria. We'll be talking about Nigeria's telco space. We'll talk about the banking space. We'll be looking at a bit of macro from Egypt, and we'll get back to Kenya obviously after that. But before that, some of the news we're tracking is one of the top news we're tracking today afternoon is the fact that the Kenya Revenue Authority has gazetted new duties that are reflecting an inflation adjustment of about 5.15% on some duties, and most notably is a new adjustment on petroleum prices, basically the palm prices. For instance, the super petrol, we've seen a new adjustment from 19 shillings to 20 shillings. We are waiting to see how this will impact this month's ERC fuel price review, and also most probably the most important is how this is likely to feed into consumer prices. And do you think that this is material enough to worry us or to worry the Monetary Policy Committee?
No, I think for a fact the Monetary Policy Committee does not adjust the key benchmark rate based on transitory price effects such as fuel and weather effects. So those are things that they keep tabs on, but then they're not used to trigger a change or a rate change. Okay. But I think it's interesting just to see that you've highlighted, we're going to discuss Egypt later on. Yeah. The inflation rate there was 9.4%, and this came from 14%. The thing there was the government injected fuel subsidies into the economy to adjust inflation. So I'm looking at it, and Egypt has been doing all of this based on what IMF is guiding, technical assistance from IMF. And then in Kenya, IMF is saying we need to increase the taxes. So it's just looking at both sides and saying one country inflation is coming down because of fuel subsidies, and then on this other side, when you're looking at Kenya, inflation is going to go up because of higher tax rates. Yet it's the same IMF that's trying to guide in this African space. So certainly very interesting conversation to have later on.
Yeah, actually, the conversation around inflation is very important because, as you know, inflation impacts the purchasing power of a currency.
True.
You could look at the purchasing power of the currency over the last 10 years. You can see the impact of inflation. 10 years ago, probably 1,000 shillings could get you a certain amount of basket of goods. Today,
no.
That basket is probably narrowed, and this is why inflation for us is very important. More so importantly for the Monetary Policy Committee, who decide on the cost of money every month, or every 2 months they sit. They're sitting this month?
Yes, on the 24th.
On the 24th,
about a week and a half from now.
Yeah, this is about a week and a half from now. They're sitting down. Do you have any expectations?
No, I don't have any expectations. And actually, I think when we can start having a call on what to expect from the CBK once we have better visibility on what will happen to the rate cap. Because the conversation that we've had and that everybody else in the market keeps saying is whatever they do with the benchmark rate, it's more or less ineffective as long as the rate cap holds. So when we get a better sense of whether there will be an adjustment or not, then you can begin to start calling it. But for now, I don't expect any change to the benchmark rate.
And just so you know, the Monetary Policy Committee is just a group of experts who sit every 2 months, it used to be monthly, to decide on the amount of money that is going to be circulating on the economy. If they think that the economy is a bit tight, then they increase the pipe such that huge amounts of money can flow into the economy.
True.
If they think that the amount of money is too high and is becoming inflationary, then they decide to tighten it. To withdraw some money, withdraw money from the system.
George, I would love to be a fly in that room, listening to the deliberations, because there's a huge responsibility on their shoulders.
Yeah, I know.
Every decision they make,
and not just that, they actually, to make that decisions, they look at 212 macroeconomic indicators. Of course, number one being inflation, consumer inflation. You can imagine people who have to peruse through papers and data and huge amount of data.
Points.
Yeah, 212 data points.
When we grow up, perhaps.
Yeah, when we grow up.
When we grow up.
But also we are tracking a news FX market.
Oh, yes.
Yeah, FX market, we've just I have a brief chart of some of the bank treasurers. It's very stable, 102.9, 103. Do you expect some the Kenyan shilling to be that stability to sustain?
I think the stability.
Do you think are we done with 100, 101?
No, I think we'll probably end up coming back to 102, closer to the 102 level or slightly below, because the demand that has been there is largely import-led. And I think there's probably also been a bit of weakening because of what's happening in the global oil prices. Futures hit the highest that they've been over the last 3 months from May 30th, largely because of the tensions between the US and Iran, and US coming together with Israel. So I think that little tension could potentially see a bit of short-term weakness, but then over the long term, maybe that it corrects to 102 or slightly below, rather slightly above 102.
Yeah, and just in case you're wondering why we track FX market, it's very simple. Kenya is a small open economy. Our inflation is largely imported, and that means the price of importation, which is a function of the price of exchange rate, is very, very important. And when the Kenyan shilling is weakening against the dollar, which is the global reserve currencies, and it's the currency in which we import most of our things, that is likely to feed into consumer prices, which is going to sometimes it's going to be ruinous. It's going to deflate the purchasing power of the currencies. Yeah, and I think so far looks fair enough.
Fair enough.
Yeah, but except for the fuel price adjustment that is likely to reflect the new duties gazetted by the Kenya Revenue. You don't expect an inflation uptick.
No. As long as you're talking inflation, George, the key thing to always remember, inflation and weather patterns, that will not have an impact in terms of whether the MPC changes the benchmark rate or not. It's something to know, but because it's cyclical, always expected, always happens, it doesn't trigger a change to the rate decision. You
talk about weather patterns, and just to remind our viewers that it's very important that if you're a Kenyan economist, or if you're tracking the Kenyan economy, you are also better off being a meteorologist. The weather patterns. Weather patterns. Agriculture is still weather driven. Yeah. We take a short break, and in that break we're going to be looking at the commodity prices. When we come back, we'll be talking investment strategy in sub-Saharan Africa. See you shortly.